Hey, what is happening, Bulls and Bears? You're watching Bull, Boom, Bear, Bust. It is Tuesday, April 25th, 2023. My name is JJ, and let's get into the news now. We're continuing to document this slow motion economic decline slash collapse. A lot of people woke up in March when they saw the bank failures, something we've been talking about here for years. There's this false sense of complacency happening right now that the bank crisis, so to speak, is over, or that the failures that we've witnessed here so far this year were just one-offs or two-offs or three-offs, if you're looking at all the banks. They're not. All the banks are insolvent, meaning they have more liabilities than they have assets. Once you deposit your money into a bank, it's gone. Basically, it's loaned out many multiples, number of times versus how much money is in the deposits, rendering the banks insolvent. Now, that doesn't become noticeable until something happens where people go to take their money out. Too many people pulling their money out at once obviously breaks the illusion, creates the problem. Also, people are just draining their accounts because of the cost of living. So we have that drain that's been happening continuously, especially ever since after the stimulus checks ran out in 2020, 2021. We continue to see mounting job losses, layoffs, already 5 times the number of layoffs this year that we saw at this point last year in 2022. So things are really starting to accelerate. This economic collapse is really starting to speed up, and you're going to continue to see a lot of things happen that are going to point to the obvious. You know, we're headed into some major economic turbulence here. Some of us will get through it just fine. Others not so fine. Unfortunately, that's just the way that it goes with economic downturns. You're going to see a lot more people become homeless. Look what's happening in LA, where we've got about three quarters of a million people potentially facing homelessness. That's the number of people about that are behind on their mortgage. Now, the numbers came out. It said it was about 246,000 households, which is 250,000, of course. But how many people are in each household, right? Nobody knows exactly. But if you say there's 2 or 3 people in each household, then it could be anywhere from 500,000 up to about 750,000 people. Will Los Angeles turn around and re-implement the renter protections? We'll have to see. But it's these types of things. It's these protections and programs that are basically saving people from economic turmoil. You know, but not all people. Some people are in economic turmoil right now. Other people are doing just fine and will actually profit from what's coming ahead of us in this economy, right? So let's focus on the profiting side of it here, of course. But let's get into some news first. I want to tell you what's happening here with wages. Real wages fall for 2 straight years. So we're told that inflation's coming down, and of course the talking heads will get out there and they'll point to a couple things. Look, gas prices came down a little bit, rents came down a little bit, but when you compare the cost of living or inflation, what they're looking at, CPI, to wages falling now for 2 straight years, every month for 2 straight years, falling wages.
Noble Gold Investments have made it their mission to stay on top of the most important economic news. 3 bank runs in the last month. These are the second largest and the third largest bank runs in history. The government is taking steps to guarantee all deposits. That means more money printing. Plus, the Fed is sitting on unrealized losses of $1.2 trillion on their $8.3 trillion bond portfolio. And the Fed could continue to raise interest rates until they crash the economy. Do you know who are the only ones that are not afraid? The ones who are invested in gold with Noble Gold Investments. Gold is the most stable asset outside of any government control. Thousands have approached Noble Gold Investments to get their hands on gold. Hurry and go to bullboomgold.com to secure your wealth now. Bag a free 5-ounce America the Beautiful coin with each gold or silver IRA if you qualify. Go to bullboomgold.com. That's bullboomgold.com. The link is also in the description of this video.
Now, this was just put out by the BLS, that's the Bureau of Labor Statistics, and it shows that we're still up, or we're still higher than we were last year. We like to look at numbers year over year, not just from month to month. Sometimes we look at month to month, but year over year is the best gauge, in my opinion. And year over year numbers say that prices are still higher than they were, even though they may have fallen from month to month. We're still higher than they were last year overall. Now, some areas, we're seeing a bit of a pullback. But just about every category that you look at, as far as the cost of living, what most people have to purchase just to stay in a modern society, most of the costs are going up. And when compared to wages, wages are falling compared to the cost of living. 2 straight years, right? So not good news. I wish I had better news for you, but that's the truth and that's reality. That's what's happening. So it's good to know the real news, right? Here's what else is happening here. There's this backstory behind the layoffs that, well, people are shopping online now. And every time I see, a news article about layoffs or the economy, that seems to be like the backstory, the excuse. Well, look who's laying off here. UPS stock drops as weakening consumer demand hits volumes. So they haven't made the announcement yet, but there's a strong belief that we're going to see layoffs out of UPS here. UPS stock fell on Tuesday morning as the shipping company said softening consumer demand hurt its quarterly sales results in 2023 outlook. The delivery service reported first quarter revenue $22.9 billion, down 6% from the same period 1 year ago. So again, if everyone was just moving away from brick and mortar stores and shopping online, why are we seeing such a big slowdown in UPS deliveries? It doesn't really add up. It doesn't really make any sense, right? So just another piece of evidence, as we point out pretty much every episode, another piece of evidence that points to this accelerated economic decline slash collapse. And it's only going to get more noticeable as it accelerates now with the layoffs, creating the snowball effect. More layoffs, more people out of work, less spending in the economy. And we have an economy that's about 70% based on consumer spending and people taking on debt. That gets chalked up as GDP, gross domestic product, gets looked at as economic growth. And now we have, instead of growth, we have shrinkage. And people would call this, in many cases, stagflation, right? We have high prices, high cost of living, but not much economic growth. Well, when you look at the way economic growth is calculated, it's based on people taking out loans, taking on debt, and going out and spending money they don't have for the most part. So when you have a system like that, then obviously when people get maxed out on debt, you're going to start seeing some economic implications. And that's what we're seeing right now, combined with lots of other things. Well, let's get into this next story here. Treasury secretaries out there, Miss Yellen, again, warning of an economic catastrophe if the debt ceiling is not lifted. What do you call something that has the need for endless amounts of debt? I would call that a Ponzi scheme. Is the entire economy a Ponzi scheme? Without endless debt increases, we're going to see an economic catastrophe, according to Miss Yellen. That's not me saying that. This is the definition of a Ponzi scheme. Yellen, in remarks prepared for a Washington event with business executives here in California, said a default on U.S. debt would result in job losses while driving household payments on mortgages, auto loans, and credit cards higher. Interesting. So, obviously they're going to raise the debt ceiling, but just think about the need for endless increases in the amount of debt that you can accumulate, right? We can't do that as a household, as individuals, but we're doing that as a country. But yet people somehow look at these entities as the people that are going to solve the problems. Well, the people that are supposed to solve the problems are the ones that created the problems in the first place. They can't balance a budget. We're spending way more than we take in. We've outsourced most of our jobs to lower cost countries because of the greed, corporate greed, as many people would call it. Bank of England economist says people need to accept that they are poorer. So this is not just the U.S. problem. Cost of living up, wages not keeping up, people going further in debt. We're going to see a tsunami of so many things happening, I think, middle or later of this year with the defaults on car loans. Mortgage foreclosures are going to go up. I think we're going to start seeing a lot more homes hit the market as distressed homeowners get desperate and desperate enough to sell. A lot of homeowners don't want to sell. You have these homeowners they bought in the last few years, got into their home with a mortgage at really low mortgage rates. But regardless of these homeowners not wanting to sell, a lot of distressed homeowners are going to be forced to sell. They may not want to, but they're going to be forced to once the bite of this cost of living, starts to hit even harder, which it will, especially the direction things are going with all the layoffs, the economy, the stagflation, high cost of living, not going to be an easier game for most people. More layoffs. Gap will cut more than 500 workers in the latest round of layoffs. And that is a struggling retailer right there. We've got Mike Shedlock out there from Mish Talk with the following article here. A tidal wave of money leaving banks will kill profits and lending. So here's where we could see deflation now. Right now we're seeing stagflation, meaning prices are very high. Economic growth has stalled. Could we see this change though with this tightening of the lending? Or will the central bank come in and just make sure there's enough liquidity to keep the lending happening, right? We don't know exactly what these planners are planning to do, but we do know that there's a lot of different possibilities and scenarios that could play out here. We see what's happening with the home lending, how they're making it easier for subprime borrowers to get into a home by making the mortgage cost less, and they're actually making it more expensive for people with good credit to get a mortgage, and that's going to help the people with bad credit, right? So they're doing some things to try to keep this housing bubble inflated. Very interesting times here. You know, if they wanted to stop rising prices and bring the cost of living down, why won't they let the housing market just correct like it should correct? It should be correcting much faster than it is. And in fact, many people won't even believe this. If you look at the Case-Shiller numbers from February, home prices went back up. That's being reported here out of the Times of San Diego, The Hill, Yahoo Finance. Home prices rose in February, breaking a 7-month streak of declines. That's how it was put out here in one outlet. Home prices rise for the first time in months as spring fever hits housing market. Case-Shiller report after several months of falling prices, San Diego prices rose. So it's happening in a lot of different areas where prices are actually going back up, even in places where prices were dropping from about 6 to 9 months prior. And I was one of the only channels out here saying that this would not be a housing bubble crash or a housing market crash, that this would be a very slow deflation of the housing market. And we've been proven correct. And look what happened. Prices even ticked up here over the past few months, right? So very interesting times, folks. Keep stacking, be well. As far as preparing for this, have some cash in case of deflation. Have some assets to inflate if we continue to see inflationary forces outweigh the deflationary forces, and be careful. And we see a high cost of living, but no economic growth. This can be very difficult to navigate. But I think all of us here will be able to navigate this better than most because, we see the writing on the wall. We know what's headed our way. We know how to brace for it, how to prepare. So we're going to wrap this one up, everybody. Thanks for watching. What do you think about UPS, the big slowdown? So there goes the theory that online shopping is the reason for all these other layoffs. Gap layoffs, real wages now down for 2 years. The tidal wave just beginning, according to Mish Talk. We'll have to see how it plays out, folks, but be careful out there. Keep stacking. Be well. Big love. Peace.